in the trading industry who's extremely successful to see what their odds are of making money? Yes, why don't we look at Goldman Sachs? That's where all the most successful traders in the world seem to come from. So let's find out how they make their money.
If you get the experience doing that, even if you lose a little bit of money, you've got to see it as paying for the education of trading with real money. So even if you lose money and say to an investment bank or a hedge fund, this is my track record, I lost a couple of £1,000 last year trading, they will look at that favorably. Okay. In terms of volatility, volatility creates opportunities for traders over any given time horizon. Listen, I don't profess for 1 second that technical analysis is not important. It is important because it provides a very good head check to overlay onto fundamentals.
I want you to ask yourself a very, very important question. Is it even possible for retail traders to make money? You've got to access the platforms. So let's have a show of hands. Who believes retail traders can't make money? 1, okay. Who believes retail traders can make money? Okay, you're right. But like right at the beginning, when we said the most important thing is to look at how the industry works. What did I say at the beginning? Look at how the people who do well in the industry work. And if you're a retail trader, you can make money if you find those people and emulate them. It's pretty straightforward. It's like walking into any industry. Find the players who win and do what they do. Form 10K. It's an annual report in the States for a public company. It gives you all the forensics of the company. Who should we look at in the trading industry who's extremely successful to see what their odds are of making money? Yes, why don't we look at Goldman Sachs? That's where all the most successful traders in the world seem to come from. So let's find out how they make their money. Go online, type in Goldman Sachs 10K, and type in the year. You'll find it in the first 2 links. It's out every year. It's an annual report. Between pages 95 and 105, you will always find this chart. And it tells you the amount of money that Goldman Sachs makes or loses per day, how many days they make and lose. So what have we got here? Intervals of $25 million, okay? On the right-hand side are days where they make money. The left-hand side, days when they lose money, and how much they make and how much they lose. So in the year 2015, Goldman Sachs made money on 212 days in the trading year and lost 38 days. And this is trading operations, pure trading. Nothing to do with M&A, commissions, or anything like this. So pretty skewed to the right-hand side. And you can see that on a typical day when they make money, they make between $25 to $50 million. So there's also a tail out there as well. Look at the tail on the right-hand side, where there's up to $100 million. With 34 days out of the trading year, they're making $100 million. Amazing, right? Why do you think they're making $100 million? Because they call the markets correct. The big situations when markets move, they get it right. And then when the markets don't move, they trade in different ways and they just make money every day. Do they go home with flat positions every day? No. They're running multi-billion-dollar portfolios. They just let the portfolio work and they let the money come in. And they don't stand in the way of it. Huge overnight risk. You can speak to Chris Cathy about it later at the pub. We used to run crazy numbers. A couple of $1 billion on the pan-European trading desk. We'd have between 200 and 400 million of that risk. And we'd run portfolios. And that was even back in the early 2000s. We weren't day trading, just big portfolios that make money. So 2015, was that a fluke? Was that a one-off? You can actually go back all the way to 99. But let's go back a few years, see what happens. 2014. Thank you very much. What about 2013? What about 2012? That was a decent year. What about 2011? You can go all the way back to the late 90s, since they became a public company and started putting out these numbers publicly. It's the same every single year. Why? What percentage of retail traders lose money? What are they doing? Everything on the right-hand side of the chart we looked at earlier. What percentage of days do Goldman Sachs make money? 90. What are they doing? Everything on the left-hand side of the chart that we looked at earlier. It's not that difficult to work out if you know what you're looking for. So, shouldn't we be doing exactly what these guys do in our own trading accounts and become the most annoying clients of retail brokers in the world? Guys who make money. Everything that you've got to do in your retail trading account needs to be the same way that these guys do it on the left-hand side. So you have access to the platforms, it's necessary to use them, but you do everything in the opposite way to the way they want you to do things. And you learn how to do it properly. And there's no shortcuts. You've just got to do it.
I would say, okay, in terms of volatility, volatility creates opportunities for traders over any given time horizon. And that's what traders live and die on. They need volatility. Otherwise, you can't make money. So the forex market, implied volatility over the last couple of years has been absolutely crushed. We've actually seen it tick up a little bit recently, especially in dollar yen, huge moves. Forex is good to learn in, but don't expect to make loads of money if you're day trading, because actually the volatility of Forex at the moment, of the major G10 currency pairs globally, is very, very low. So it's very difficult to make money over short periods of time. In equities, generally, historically, volatility is higher than in Forex. Listen, I don't profess for 1 second that technical analysis is not important. It is important because it provides a very good head check to overlay onto fundamentals. So when you've got a fundamental predisposition where you've done all your work on a situation and you believe that something's going to go up massively in the next year, and then you check the technicals and it says you're going to be wrong for the next 2 months, then that goes on the watch list and you wait till it actually turns in your favor. Then you jump in and then all the planets are aligned. So you need to have that kind of discipline to overlay technical analysis onto fundamental analysis. But then people who use 100% technical analysis, when something breaks a trend or when something breaks a range, it's happening for fundamental reasons.
Do you think that helps in your work?
Yeah, I really think so. I mean, you've really got to do it in practice with real money. If you get the experience doing that, even if you lose a little bit of money, you've got to see it as paying for the education of trading with real money. Okay. So even if you lose money and say to an investment bank or a hedge fund, this is my track record, I lost a couple of £1,000 last year trading, they will look at that favourably. So you've got no downside in doing it. So as long as you show that you've done it and you've traded for a year, and they say, well, what lessons have you learned? Well, I've learned not to do this. I've learned not to do this. The market last year was really tough. The fact that you're actually doing it means you're going to learn faster. So because there's a great saying, you're not trading until you've got a position, right? Or you don't know anything about a stock until you've got a position. So once you have a position in something, you're forced to learn and monitor your risk. So I think it's really, really important to do it. And then going into the investment banking side, it is very, very different. So the approach to trading is very different in investment banks and hedge funds, the way professionals do it, compared to the retail trader or the man on the street. So you'll learn how to do that, but from the ground up, just having a position will teach you a lot.